Hi, everyone. My name is Tolu Aluko. I'm the MD CEO of MedAdvance. We're here to present to you a business case on healthcare equipment financing. Before we dive into the presentation, I'd like to introduce the rest of my team. I have the Chief Technology Officer, Abdul. I have Chief Financial Officer, Patrick. I have Chief of Growth, Patience, and also have Head of Operations, Afiz. Afiz, over to you.
Thank you very much, Tolu. So MedAdvance, we basically provide healthcare loan facilities and credit facilities to healthcare providers within the African space, right? Our mission is to provide accessible loans and credits to support healthcare facilities growth and optimize their operations and provide quality healthcare. Our vision is to revolutionize healthcare financing in Africa and ultimately the Gulf Cooperation Council region. Next slide, please. So our values are in 5 buckets: access, integrity. Core of it is the innovation, collaboration, and essentially all our customer journey is very, very customer centric. Next slide, please. So the problem healthcare has faced over the years is the fact that our governments in Africa they've constantly seen healthcare as a charity where they don't need to finance a lot because they can afford healthcare tourism in other advanced countries, right? It's basically demeaning the other African people and giving less attention to healthcare provision, which is where MedAdvance comes in. Please, next slide, please. Our solution is to provide this inflection point for healthcare facilities, provide these credit facilities to ensure that they are able to provide quality healthcare to patients, as well as expand and also improve their processes. Next slide. So this is just like a screenshot of what our solution looks like, and also a sample of the email template you get when your loan is approved. Next slide. So how it currently works is we have a portal where lenders go in, they sign up, provide certain data that we have required, including their financial statements, right? We would analyze this financial statement and see the viability of them paying back the loans that they are given, and also what their liabilities and their assets is saying, right? Looking at their balance sheet and making a decision using technology and also human eyeball to make sure that they're able to pay back whatever loan that we give them. So the next step is now for us to approve the loan and also the amounts that we think that they can repay. Then we send this email to them congratulating them that their loan has been approved, which is the template is attached in the previous slide. Then having done that, we basically monitor every facility that will provide a loan for throughout the tenure of the loan, and also provide advisory services and also consulting services when we need to. And after payment of the loan, we'll also always make a decision to decide if we want to give additional loan and of course, maybe just sever the relationship. Next slide, please. Patience, please.
Okay, thank you. So according to a report by Fitch Solutions, Nigeria's medical device market looks bright as it's estimated to grow at 9.2% in terms of dollars, which will see its growth by 2027 at 310.7 million. This growth presents significant opportunities for MedAdvance. Next slide, please. The Federal Ministry of Health, as of 2019, reported 39,983 healthcare providers, and MedAdvance intends to target 6,000 of these healthcare providers, which are clinics, hospitals, and other medical practices. Next slide, please. A SWOT analysis was also conducted to assess our external and internal factors. And one of our strengths is the use of technology and also the strong relationship we have formed with equipment manufacturers. Opportunities such as the government's interest in healthcare, the huge potential of medical tourism also seeks to advance MedAdvance space in healthcare financing equipment. Also, other weaknesses we noticed include competition from financial institutions, both local and international, and also threats such as decelerating economic growth and also the decline of oil production. Thank you. Over to you, Abdul.
Thank you, Patience. According to the studies conducted by research centers and institutions, it has been determined that the healthcare equipment financing sector in Nigeria exhibits a significant level of competitiveness. In order to differentiate themselves in this industry, companies must offer distinct services and capability, including specialized expertise, outstanding customer service, and a commitment to continuous innovation. Next slide, please. BMI Industrial Research has conducted a thorough examination of the primary competitors in the field, which primarily comprise commercial banks, microfinance banks, and loan companies. The analysis encompassed an in-depth assessment of their operational attributes, highlighting that healthcare equipment funding services are integrated within the broader range of banking and finance activities. Next slide, please. Upon conducting an analysis using VIO framework, we have determined that our competitive advantages will stem from our utilization of technology, our expertise in crucial industry domains, and the establishment of key strategic partnerships. Next slide, please. In addition, a major point of differentiation for us compared to our competitors will be the provision of comprehensive business advisory services. Indeed, when a healthcare institution partners with us, our company will actively collaborate with them to review and monitor the business plan and cash flows. Before yours, Tolu. Thanks.
Thanks. Our future location is for us to expand to the entire African markets, starting with Nigeria. And of course, we move to Ghana and of course, the rest of the African markets. Our pricing, financial model offers a loan to healthcare providers without requiring collateral, streamlining access to capital and expediting the funding process. We plan to charge 20% interest rate on each loan. And of course, the loan tenor is set at 12 months, allowing borrowers a year to repay the loan and the accrued interest. Our marketing strategy, our business model is to focus on the B2B markets. We'll also plan to combine marketing strategies such as digital marketing, word of mouth, email marketing, cold calling, and to reach out to our target audience with a blended CRM system. Our promotional strategy for us in MedAdvance, we plan to raise the brand awareness by attracting qualified prospects and convert them into loyal customers. Over to you, Patrick.
Okay, so our financial projection for we have a financial projection for 3 years. Year one, our net income is $990,000. Year two, $1,168,000. Year three, $1,275,000. With a net margin 28.22%. Year one. Year two, 31.58%.
Okay, so I'll just go ahead with that. So by year three, we expect that would have realized the revenue of $13.9 million. Our assumption, we have various assumptions, of course, but I will just pick one or two assumptions so that we can move ahead. Operating expense are expected to rise by 5% per year. We also expect that all net income will be added to the loan disbursement fund. We don't expect any form of liability, just to ensure that we are, driving the right, revenue and income as expected. Our capital requirements, we intend to raise, $20 million through investors and also, co-funders. We intend to achieve 100% of the profits made annually, which will be retained in the business to increase the loan disbursement capacity for the first 5 years. 100% of the profits made annually will also be retained in business to increase the loan disbursement capacity for the first 5 years. Our exit plan, we intend to raise funds by the 50th year. We tend to raise IPO just to ensure that we continue to be more profitable and post the necessary income as expected. Thank you. This is our reference. With this business plan of ours, we believe that we've been able to present what is required for us to gain the required fund and investment as expected. Thank you very much.
Thank you all.
Stop the